Like you're leveraging crypto for some of the wild moonshot or stupid ROIs that are out there, right?
Yeah, I've got some stuff rolling at 60,000% APY.
Wait, 1 second, pause. I just got to breathe that in for a second. Is that a 5-digit ROI? Because my book only goes up to 4. I didn't know they had a 5. No, this guy's 60,000%. You said that, right? Hey, what's up? Kris Krohn here on the Have It All Show. And guess what? Today we are talking about crypto and the game of real estate. Like, wait a second, oil and water, do those two different investments even mix? Well, I gotta tell you, in 2017, they recorded the very first transaction where a house was bought entirely with Bitcoin. So I got news for you. These worlds are colliding. The time has come. And today I'm speaking with a good friend of mine who's a major enthusiast of crypto, makes crazy good money in it, but he also makes a lot of money in the game of real estate. He's a successful business owner. Today, I'm talking to PC Laptops owner, Zydex owner, Dan Young. What's up, brother? How you doing?
Hey, Kris. What's up, dude?
Dude, so glad to have you here.
Thanks, man.
Like, can you believe that you're on that side of the valley and I'm on this side of the valley and we're only really just like rubbing shoulders?
Weird, huh?
That's so strange. Dan and I met this year in a mastermind as we've been rubbing shoulders. I'm like, wow, you know, I need more Dan Young in my life. Mm-hmm. And last week it was very cool to be able to hang out with you, checked out your crypto operation, your business operation, and I got to tell you, I'm impressed on all fronts. And I've had a chance to meet, you know, I didn't even tell you this, but I do my due diligence on people. So I've had a chance to kind of put my feelers out there and like, tell me about this Dan Young, because I want to get deep in his camp. So tell me what you think of him. And I got to tell you, it's come back as nothing but respect and praise.
Oh, good. Thanks.
And so super excited to have you here today. We are going to talk about this whole notion of, wait a second, can you buy crypto, you know, real estate with crypto? Like, does that really work? Mm-hmm. We're going to go there.
Okay.
Because I think you're going to have an interesting take on it. In fact, I think you just had a killer weekend, right? Big profits in crypto.
Huge weekend.
And that's going to actually aid you in the game of real estate, isn't it?
It is. In fact, I'll be doing some selling after this podcast.
Awesome. Well, listen, let's just start with a little bit of background, because for those of you that are actually watching, not just listening, you might be like, wait a second, I know that guy. That's Dan Young. That's the PC Laptops guy that made those crazy commercials, right?
Yep.
Exactly.
We love you.
Yeah. So, dude, tell me just a little bit about your history, because it's a pretty, I mean, listen, it's an extensive bio. Try to keep it short.
Yeah. Okay. So I came here from Los Angeles. I was a very delinquent teenager. My sister lived up here and worked at the U, and she said, I'll adopt you. So I came here and then did telemarketing, right? Learned how to sell on the phone, cold call dialing, and then worked at the swap meet. Dressed up in a samurai outfit and learned to make $2,000 a day at the swap meet selling pepper gas and nunchucks and sunglasses.
Are you serious? $2,000 a day?
It was awesome. My wife was like stoked. She's super cute, so she would like lure people into our booth, and then I would do a kung fu teppanyaki sales presentation.
Wow, yeah. Amazing. So super old school, work crazy hard. But that matured into something.
Yeah, so I started a company called PC Laptops, which is a computer company. I worked at a big box computer store. They went bankrupt. I got the database of all the customers who had bought computers from me, cold called them, gave them my pager number, and told them I'd honor their warranties forever. First year, lost $27,000. Next year, did $1 million in rev.
Oh my gosh. Wow. Dude, you know what? I love the great story of an entrepreneur that risked everything and at one point had to say, yep, this is it. That was stupid. Yeah. And then turns out to not be so bad.
Yeah, it turned out to be really, really good. So then I started a company called Zydex, Xidax, online gaming company. We sell computers for gamers and business owners and developers. And that's just exploded. So it's been about 11 years for that. And along the way, I've been accumulating a lot of real estate. Back in 2013, got into cryptocurrency, and then built the largest mining facility in Utah.
Wow, so impressive. Well, listen, we're gonna dive deep on crypto. I just got to tell you, I love your logo. I was wearing your hat on Saturday.
Oh, thanks, dude.
And I was like jamming out. And I'm
Zydex.
like, this is a sweet looking logo. I like it. I like a company that has a sweet logo.
Thank you.
Okay, so listen, this whole conversation, I think everyone also needs to understand that you're not a novice when it comes to real estate. You own commercial, single family. You actually have some considerable holdings here in Utah. I'm sure that's put a big frown on your face the last 2 years. The prices have just gone up and up and up, right? I mean,
it's been great. It's been almost the wind is with us, so it's been super easy.
Yeah, absolutely, 100%. And at some point in investing, the wind is going to be with you. I think crypto the last week, the wind's been with us too. Mm-hmm. So it feels good to win. So most people, I think, would look at something like real estate, a hard tangible asset, and crypto like this ethereal digital thing that you supposedly own. Like they're so different from each other. And my personal experience is that you have seldom people that meet in the middle. They're like, no, I'm a real estate guy, and I'm a crypto guy. And dude, you're both guys. So like, can these worlds really exist where you crush it in real estate, where you earn stable ROI, and where you can put some of your money in crypto and earn some crazy ROI?
You can. It's like broccoli and chicken, Like they kind of go together.
They do.
You can't just eat just broccoli or just chicken, man, or you're feeling kind of weird, right?
Yeah, they do go well together. We just had some of that.
That's right. So, yeah, they complement each other, though. Real estate, obviously a lot of the listeners out there are pretty good at it or learn from you about that, is a great investment. In fact, my favorite investment as I get older. But crypto, being I'm still fairly young and sharp, is phenomenally fun and can generate a huge amount of money to deploy into real estate.
Yeah, I love that. So it's interesting. You're attracted to this episode for one of maybe, I don't know how many different reasons, but we're basically saying, can you use crypto to buy real estate? And, according to this article, the first house transacted with Bitcoin in Texas happened, 4.5 years ago. So, I mean, yes, you can do that. But I think that it's going to happen a little different than most people are thinking. I think it's, can I make money in crypto and then can I use my winnings to go buy real estate?
Yep.
What are your thoughts on that?
That's exactly my strategy. And it's a pretty simple formula. When I buy crypto in different positions, if I pull a double, I'll pull my principal out. I'll deploy some back in different diversified crypto products, but I'll take a percentage of that and deploy it into just nice, good, boring, high cap real estate, whether it's residential or commercial. I'm more of a commercial guy.
Undisputable wealth, right? Like wealth that's just going to continue being with you. And yet, when you compare it to crypto, like, dude, you're in some crazy stuff. Like, you're not earning like I earned 12% this month in crypto, dude. You're freaking earning some. Like you're leveraging crypto for some of the wild moonshot or stupid ROIs that are out there, right?
Yeah, I've got some stuff rolling at 60,000% APY.
Wait, 1 second, pause. I just got to breathe that in for a second. Is that a 5-digit ROI? Because my book only goes up to 4. I didn't know they had a 5. This guy's 60,000%. You said that, right?
60,000.
But I'm just curious if you had to say what you thought your blended average was. I mean, the things that are earning lower and higher. What do you think your blended ROI average return is on crypto that you're shooting for?
I'd say from stable coins and things like that. Usually, 200-300% a year.
Yeah. So look at that. It's like, wow. My best real estate is earning me 50 to 100% a year.
That's phenomenal for real estate.
Oh, no. It's like some of the highest ROIs I've ever seen, but 200 to 300% in crypto. I need people to understand. I do this thing called the rule of 72.
Yeah.
I'm going to pull up my calculator right here. For all those of you that are following along, you're just going to take your phone out. There's this feature with the calculator, and I'm just going to say, all right, I'm just kind of curious if I were
how many years to double?
If I were taking 200% and I divide that by 72, it says that that's 72 divided by 200 means that my money is doubling 0.36. Wait, I have to multiply that by 365 days in a year. And basically that means that my money is doubling really, really fast. My money is doubling every 131 days. So every 3 to 4 months.
Nice.
So that's pretty significant because if you're earning something like that, you're telling me, and you've got some rules. You make your money in crypto, but you have a strategic way of pulling it out so that you can put it into real estate. Let's talk about your rules. Let's say you identify an investment that has 200 or 300% ROI. What's your first rule when you put that money in?
I don't put anything in that I'm not willing to lose.
Okay, so rule number 1, only invest what you're willing to lose because it is high ROI, high risk. Okay, got it? What's your next rule?
Dollar cost average.
Tell me what that means.
So every month I put a fixed amount in to crypto projects.
Okay.
No more, no less typically, unless I have a real estate windfall or a stock windfall, and then I just reverse engineer the same rule I do with crypto.
Is a safe way of saying dollar cost average, is that in a very brutal Neanderthal way, is another way of saying that don't liquidate all your assets and throw it into a crypto play?
Yeah, don't go all in on anything, man. To get rich in crypto, though, you just need to be consistent and control your emotions. So the third rule is controlling your fear. And I have some strategies I could share on controlling fear.
We're going to have to talk about that. But I know you've got this other rule out there that says once you've doubled your money.
Oh, yeah. Okay.
Well, I'm going to call that the fourth rule.
Okay. So when you're doubling your money, so if I put in, $1 million into crypto and it turns into 2 million, I'll just peel off $1 million. And so I'm playing purely with house money.
So you're taking out your principal.
Yeah, just take it out.
Yeah. So you're playing with principal that you're willing to lose. After it doubles, you pull it right back out and put it back into safety. And now you're just investing with your winnings.
Yeah. I mean, the scary part is while that's doubling.
Yes.
That's your risk zone. And that's where you need to control your emotions.
Now, I am kind of curious. We could go on to rule number 5, which is, what percentage do you take out of your winnings after they're winning more?
Okay.
But before we go there, do talk to me about this fear thing. And this is, I think, what wrecks a lot of people. Years ago, I got into day trading and my emotions wrecked me, before I learned some emotional intelligence. So what are your rules on fear?
Fear is like this. I mean, I apply this to real estate and stocks and business and everything like that. Really, you go in with the intent, and you got to know what your maximum loss is. And if it's 100% maximum loss, right, and that's happened. The past doesn't equal the future, but it's good. It gives you a good idea. So I know that crypto has dropped 70, 80% a few times. So I put that mathematical in there. Will it be cool if it drops 80%, 90% or something crazy number? If the answer is okay, cool, then I go in, right? I don't get emotionally attached. I don't listen to buddies who don't have as much crypto and they're weird. Hey, you should buy this hot tip of the day kind of crap. Same thing with stocks, right?
Full of those all day long.
Yeah, and then also I look at mathematics though. So I use some different mathematic calculations to decide what is the risk level. Once you decide what that risk level is though, I only put in what I'm still willing to lose. I don't go all in typically. So when Bitcoins were first there, I had a certain amount of money I wanted to put into it. And I just divided what I had by 10.
Yeah.
Right? And then I just deployed it over 10 months. I caught some highs. Luckily, I didn't put it all in at once because after 3 months of being into crypto, it dropped 90% almost, or 80%. And luckily, I had money left to put in when it was 80% off.
Yes.
So my average buy was really chill.
Wow. Dude, I love that. And, a lot of people don't understand that. I've learned some of these tips from Ray Dalio. He's one of the most successful investors of all time, owned one of the largest, most successful hedge funds. I think he's returned $30 billion to his investors in winnings. And Dalio says that you should get into different asset classes. And he says if you can get into, when you finally enter your 15th asset class, it should reduce 85% of your risk. Because the reality is, in our lifetime, every asset class will go nearly to zero at least one time. And you don't know how to plan for that. It's just a statistical probability that can happen. And, you see these people that put money into IRAs and 401ks, and then all of a sudden the market takes every 7th year its nasty bloodbath, and people lose 30 or 40%, and they freak out and they lose it, and they're emotionally impacted because that's their retirement. And I hate having strategies that compromise my feelings like that. When I started doing some day trading years ago, I'm early Kris, I didn't follow your rule. I had $20,000 that I had worked hard to set aside. And I'm I'm going to trade with that. And the mistake was if 20,000 at that time of my life was what I had available to invest, knowing what I know today, I would have chopped that up 10 times, like you said, maybe even 15 times, and only deployed $1,000 to $2,000 per opportunity, so that if 3 out of 10 went bust, I wouldn't lose everything. I would lose a part. And then hopefully, if I've diversified and I've got some winners in there, I'll start averaging out some winnings in there as well. And so I think it's pretty smart that you did that right out of the gate. What else do you do to keep your emotions in check?
A few different things is don't fall in love with any investment, whether it's real estate or crypto. There should be no emotional attachment. It's basically just a mathematical calculation.
Yeah.
And you just have to follow a thesis. So you should write a personal thesis of how you're going to invest.
Yeah.
And what you're going to do before the event occurs.
Yeah.
And so if you've made a predetermination in your mind that when Bitcoin corrects 80%, this is what you're going to do.
Yeah.
Then it's not hard to do it. Now, but if you hit it while you're in a heightened emotional state, you're going to do dumb things.
Yeah. It's interesting. When I built my real estate strategy years ago, I buy a house every single day. My team does all the work on it. And I never get to see these houses, what they look like. There's only one piece of information I want. They put all this information into a really complicated custom pro forma, and it has to show that I'll earn a minimum of 25% a year on my money. And if it does, I don't even give them the green light. My team just automatically buys it. Like this
Nice.
whole system is automated because it's data and numbers driven. There's no feeling or emotion about it. I remember looking at one of my houses that I bought 9 months ago, and I'm like, man, that is a really ugly, ugly color. I would have, no, this is not an emotional thing. Who cares about the paint color? Who cares what the style of the house is? Who cares what the garage looks like? You win by the ones and zeros. You win by the numbers of it. So I love that whole idea of removing emotion, but that's not the only math that you play by. So when you've doubled your money and you're peeling off your original principal, then as you keep winning, what do you peel off then? Like, does every time it double, you take your money out?
Then after that, after it doubles, I take 10 to 20%, just depending on how risky I feel it is. If it's pretty solid, I'll leave more in.
Okay.
If it's pretty risky, I'll take more off.
Yeah.
But I'll follow that. So, and there's even some that I'll actually even take off half of a double if it's just like, this shouldn't be happening type of stuff. And the thing in crypto is if it looks too good to be true, it could be true.
Yeah, that right there, that was just a wait, what? Something's got to be backwards if you can earn this high of an ROI.
In crypto, if it looks too good to be true, it could be true. And it's just crazy. There's stuff that I've seen that's just like, this is a Ponzi scheme. I can't even believe this stuff. And this stuff is returned, 1,000-fold. And I'm just tripping,
Wow.
But again, you really got to only put in a percentage you're willing to lose. And most of your investments should probably not be like crazy moonshot things,
Small percentage. So tell me, how much time a day do you spend on this crypto stuff?
I quit watching Netflix and all professional sports. I used to really love watching basketball, football, soccer, and all those things. I quit all those things. So I just took that time and video games, and I transferred all of it into crypto time. So usually 4 to 6 hours a day is where I'm into it. But for me, it's entertainment. So I'm eating a sandwich and I'm, doing it.
You're enjoying it, man. You're eating up the charts. You're really in it. And dude, you were just telling me you had some really crazy, it sounds like you had a nice 7-figure weekend.
It was great. And this is, and it's still running up. I checked it while a little break between our last meeting, and it's a run up. But I'm not going to get greedy. Pigs get fat, hogs get slaughtered. So I'm going to peel off some profits now and, deploy it into some key real estate projects that I've been eyeballing.
It's kind of interesting, this whole idea of crypto and real estate. So what I hear you saying is you're going into crypto as a way to grow your capital, and then you have a strategy for taking it out and then putting it into real estate. Because the crypto market, dude, it does have its ability, even inside of a year, to lose 70 or 80 or 90% of its value and climb back. But as long as you keep peeling it out and popping it in real estate doesn't have that kind of volatility. And even when the market goes down, if you've got the right tenant, you're still making great cash flow. You're picking up huge tax benefits. It's almost like real estate belongs in the real world. And then you've got crypto in this virtual world, and you found a way to make them both mix. And if I had to guess from the time I spend with you, 10 years from now, you're going to wake up one day with all of these real estate holdings.
Oh, yeah.
And a lot of it came out of your crypto.
Absolutely. In fact, 80% of my real estate holdings came out of crypto. And really, crypto is a way to, again, compound and generate good cash. So you have a lot of ammunition to pull the trigger when you find the right real estate deal. And I'm super scrutinous on real estate. I'll look at 50 plus deals before I pull the trigger on one. If the math doesn't align, I just no, that's my rule.
Super smart. So you've also been telling me this thing called staking that I didn't really hear about until we really sat down and started talking about it. And I'm like, wait, this sounds like a real estate principle. So for those of you that are like, wait a second, in real estate, there's this thing called hard money. Someone needs money to put up for a deal, and then there's going to be some really high interest that comes back to you for lending. I got buddies that literally just make stupid money being that hard money person out there in the world for people that need quick money, 3 months, 6 months, whatever. But that concept exists in crypto.
Right. Mm-hmm. So staking is pretty interesting. You can take certain cryptocurrencies, and you can lend it in a sense, right, to exchanges, and they pay you an annual return for that. Actually, it's not annual. A lot of it's compounded 10 times daily, or some crazy number like that. So it's kind of a cool way to take the cash that you're sitting on or crypto that you're sitting on and convert that into some cash flow.
Yeah.
Which is cool.
Dan's Millionaire Code. That's where you can follow Dan, by the way, on Instagram. And I think he's a person completely worth following. So I want you to go find him, friend him, like him. And I think you're going to enjoy a lot of the content that Dan will be sharing with you. I love all the stuff that you put out there.
Thank you.
But in the crypto land, I think it's exciting because I'm at a point where I really do like to be super diversified. I've done some safe things in crypto. I think I also own like 28 million coins of this one thing that is about to hit the market. And I'm like, just give me a 5 penny evaluation. I'll take a 1 penny evaluation. So I mean, I've played in crypto a little here and there. I own several hundred, miners that were mining Bitcoin, Ethereum, and some different things, but I'm not playing in it to the extent that you are. And I got to tell you guys, one of the reasons why you might want to follow Dan is because Dan was just sitting down with me last weekend with some of my buddies and he's like, hey, here's how you stake for earning 12, 14% on your money every year. Here's a place where you could stake and earn 70% on your money every year. Here's a place where you could stake and literally earn thousands of percent every year. And but at the end of the day, it sounds like you've got a blended approach where you're going for that 200-300% return, peel that money out, drop it into real estate. So it's kind of like crypto's a little bit of an active day job that just makes you really, really, really good ROI that you can then place into real estate.
Crypto is just an ammunition generator to accumulate real estate.
So if you wanted to give some tips right now for our listeners before we wrap up on what could they do if they want to go down more of your path, what do you think they should do?
First things first is open an account at a good exchange. Crypto.com is one you may want to look at because it has easy staking in there, right? Coinbase, in my opinion, they keep too much of the staking profits.
Got it.
So they're kind of greedy, right? Whereas, let's say on Coinbase, they pay you 3%. On Crypto.com, they may pay you 14% for the same loan you give them.
That's a very wild difference.
Yeah, and again, because Coinbase has more overhead, right? Publicly traded in that. But the security you have working with Coinbase is they're larger.
Yep.
So the chance of them defaulting is less than a smaller exchange.
Yeah.
Crypto is kind of like mid-size, mid-large, So again, risk reward, right? And I would never put all your eggs in one basket. I would definitely spread things across different exchanges, different tokens that you research, and it's a safer way to go.
And what is research? Does research really mean, if someone else gave you a hot tip, just that's your research? Because I swear that's what most people deem research to be.
Yeah, with research, YouTube videos are a great thing. You can also look at market cap. So if you go to a place called CoinGecko or CoinMarketCap, these two websites will show you what the largest cryptos are and how long they've been around. If you have one that's been around a long time and it's a very large market cap and big institutional investors are putting in there, usually those giant institutional investors aren't that dumb if they're deploying that kind of money into those. That's probably safer than some obscure one that your brother-in-law told you about at a Thanksgiving party,
Got it. Awesome. Dan, any final recommendations, words for anyone that wants to go head over heels in the crypto game and use it as a strategy, a diversification strategy to go more into real estate?
The biggest advice is just get started. If you haven't gotten started, even if you're putting $20 in there or something, just get started so you can educate yourself, get your brain kind of in the understanding, and as your confidence grows, you can diversify your portfolio.
I love that. Awesome. Dan, dude, thank you so much for joining us today. Guys, remember Dan's Millionaire Code. You can follow him there. Find him on Instagram. His content is great. Dan, I appreciate having you in my life. Thank you for being my connection to crypto and a lot more real estate.